Good afternoon, sir.
Good afternoon, Harsh.
Hi, sir. Good afternoon. How are you?
Yeah, fine. You're able to hear me?
Sorry, sir.
You're able to hear me?
Absolutely clear. You
Okay.
have just switched off your video. You might switch it on when the session starts.
Yeah. No. Just I'm whether my video is okay? Video is clear?
Test, testing your video. Your video is
Yeah, testing.
absolutely clear.
Okay, voice is also clear, no?
Voice is clear. Internet connection is also strong.
Yeah, it's actually my Wi-Fi
It's absolutely
from my
perfect, sir.
home only, no?
Good, good, sir. So I am
Okay.
getting the other speaker, sir, and we'll get started at 3.
Okay, right, fine. I'm muting.
Sure, sir. Thank you.
Good afternoon, Mr. Rangarajan.
Yeah, good afternoon, sir.
Good afternoon, Mr. Balwinder Singh.
Sir, good afternoon.
कुछ विकास मदन के तुम
Rangarajan, good afternoon.
Good afternoon, sir. Good afternoon, Bhavinder sir. Good afternoon, everyone. We would get started shortly. We are just awaiting Nanda sir to come, and then we'll get started. Thank you so much. Greetings, everyone. Very good afternoon to everyone present over here, to all the attendees, and to our speakers. I would like to welcome Mr. K.M. Nanaya, Managing Director, Equifax Credit Information Services and Country Leader, Equifax India, Mr. V.P. Nandakumar, MD and CEO, Manapuram Finance, Mr. Akhil Handa, Head Fintech Partnership and Mobile Banking and Digital Lending Department, Bank of Baroda. He's yet to join. Mr. Balwinder Singh, President, the Institute of Cost Accountant of India, and to our moderator and our ICC FSI member, committee member, retired GM, Mr. S. Rengarajan. Rengarajan, sir, I would kindly request you to take this forward and start the session, sir. Thank you so much.
Shall we wait for Mr. Akhil Handa to join, or shall we proceed?
Sir, you can start. I think Akhil sir will join in a short while, but you can start, sir.
Yeah. Okay. Respected Mr. K.M. Nanaya, Mr. V.P. Nandakumar, Mr. Akhil Handa, Mr. CMA Balwinder Singh, distinguished guests, ladies and gentlemen. Very good afternoon to you all. It is my great pleasure and honor to welcome you all to this webinar today. On behalf of the Indian Chamber of Commerce, I would like to extend a very warm welcome to everyone connected with us. Almost 93 people are connected with us. First of all, on behalf of the Indian Chamber of Commerce, I would like to express my great pleasure in welcoming Mr. K.M. Nanaya, MD, Equifax Credit Information System Private Limited, and Country Leader, Equifax India and MEA. Please come, sir. It also gives me a great delight to welcome Mr. V.P. Nandakumar, Managing Director and CEO, Manapuram Finance Limited, for being with us today. I welcome to you, sir. Sir, the Manapuram, sir, Manapuram, sir, the screen has to be adjusted a bit, sir. Yeah, thank you. I warmly welcome Mr. Akhil Handa, Head Fintech, Partnership and Mobile Banking and Digital Lending Department, Bank of Baroda, who will be joining shortly with us. I heartily welcome him also. I also welcome Mr. CMA Balwinder Singh, President, Institute of Cost Accounts of India, for joining us today as a special invitee. Ladies and gentlemen, Digital India is only the vision of the government. It's not only the vision of the government, it is now the vision of each and every citizen of India. Whether it is in personal life or in official life, digital disruption is playing a major role. Digital adoption is not only by youngsters who are born with a Google spoon, but most of the elders, more particularly the women folk, adopt digital faster because of necessity and convenience. Business models have changed with a lot of digitization. Even a coconut merchant selling coconut on the street accept digital payments. A flower merchant outside my gated community, she is displaying her merchandise in WhatsApp through the WhatsApp group. No wonder financial sector, being the fulcrum of the economy, has made huge progress in digitization of the processes. As banks are being prodded by the government to extend liquidity support to micro, small and medium enterprises, a number of digital lenders and non-bank finance companies are jumping aboard to offer fast credit solutions to these firms. Banks have also made lot of initiatives like PSB loan, 59minutes.com, participation in the TREDS platform, online loans, etc. COVID-19 has not only disrupted our lifestyle, but how we do business as well. Supply chain disruptions, steep fall in consumption demand, and stress on the banking and financial sectors, the pandemic is ushering in an unprecedented challenge for the economy. While the world gradually finds a viable path to normalcy, it is interesting to see how the crisis has also ensured opportunity for innovation, learning, and behavioral shifts. Digital transformation has accelerated. Businesses have amplified their technology investments on cloud-based products and services, and digital sales have gained momentum with the traditional retail stores going online for the first time. COVID-19 lockdown has expedited the digital-first approach, helping the country's Digital India vision move a step closer to the reality. As people continue to stay at home and work remotely, the need for businesses to go digital and align their existing operation with the new normal has become critical. The digital transition caused by the unprecedented pandemic is now visible across sector, be it banks, be it grocery or food delivery, be it e-commerce. The NPCI, National Payment Corporation of India, reported that Unified Payment Interface, UPI, recorded 1.34 billion transaction worth rupees 2.64 trillion for June 2020, significantly up from 1.23 billion transaction worth rupees 2.18 trillion in May 2020. The lending industry is pivotal to the economic recovery. The Reserve Bank of India estimates the total addressable credit demand by the country's MSMEs at rupees 35.53 trillion, and the overall supply from formal sources, the banking and non-banking sector, is at rupees 13.92 trillion only. This credit gap of up to 24 trillion suggests that traditional lenders or traditional way of lending are unable to serve the segment of the borrowers. As it becomes critical to build resilience and adaptability in the face and aftermath of the COVID-19 crisis, digital transformation across the lending landscape becomes imperative. With the Government of India and regulators pushing for improved digital financial infrastructure, digital lending has provided a strong impetus to lending, especially helping borrowers who are otherwise unlikely to benefit from formal sources of finance, that is the banking sector. New lending platforms are transforming credit evaluation and loan origination, as well as opening consumer lending to non-traditional sources of capital. The digital lending business model is an important one in an economy trying to solve many problems triggered by COVID-19. Digital lending has all the elements required to adapt to a post-COVID-19 system of delivering contactless financial services. Digital lenders see lending to MSMEs as a business opportunity. The digital lending industry offers a wide range of alternative lending options such as cluster-centered funding, point-of-sales based, cost-based lending, P2P, peer-to-peer lending, then invoice-based lending, and cash flow-based lending. COVID-19 has caused serious disruptions to the Indian economy, but there are some positives that have also come out of it. The rise of fintech solutions in the banking and finance space will significantly help borrowers to finance their businesses. Thus, a mix of traditional credit facilities from banks, non-banking financial companies, and innovative financing mechanisms from new age digital lenders will be critical for the growth of economy as a whole. With these few words, I once again welcome all our eminent guests and speakers and look forward to fruitful deliberations and interactions. Thank you all. We have with us Mr. CMA Balvinder Singh, the President of the Institute of Cost Accountants of India for the year 2019-20. He is a leading practicing cost accountant. He is serving as member of various government committees such as Government Accounting Standards Advisory Board, Insolvency Law Committee, Accounting and Financial Services Sectional Committee of BIS, Bureau of Indian Standards, among others. CMA Balvinder Singh is also a fellow member of the Institute of Chartered Accountants of India, fellow member of the Institution of Valuers, licentiate of Insurance Institute of India, Information Security System Auditor, and certified arbitrator. As a cost accountant, he is having vision on the economy at macro level and expertise on lending principles at micro level. Let me invite him for the opening remark for about 10 minutes on our panel discussion, Digital Lending, Present and Future. It is over to you, Mr. Balvinder Singh.
Thank you, sir. Respected Mr. K.M. Nanda, Managing Director, Equifax Credit and Country Leader, Equifax India. Mr. V.P. Nanda Kumar, Managing Director and CEO, Manapuram Finance Company. Mr. Akhil Nanda, Head of Fintech, Partnerships and Mobile Banking, Digital Lending, Bank of Baroda. Mr. S. Rangarajan, Member ICC BFSI. Distinguished ladies and gentlemen, it is a privilege to be here among us, this current audience, and going with the opening remarks on the today's topic. Dear colleagues, over the last decade, technology has revolutionized industries across the world. There's a revolution, including the revolution in the financial services. Especially in India, in the last 7 years, there has been a paradigm shift in the customer behavior, going from offline to the online financial transactions, along with the rise of fintech companies which have enabled this change. Broadly speaking, lending can be broken into 5 parts. There is a customer onboarding, underwriting, disbursement, repayment, collection. The digitalization of the process has had mixed results globally, and what we have seen evolve today is a hybrid model where a combination of technology and on-pit speed offers the most viable and scalable proposition. If I talk of the customer onboarding, this digitalization of customer onboarding has been varied depending on whether it's a personal or SME loan. The prioritization of customer experience as well as the user experience have made the process of applying for a personal loan seamless. Small and medium enterprises, on the other hand, have had a mixed experience with the majority continuing relying on DSS. However, SMEs looking for smaller ticket loans have been able to benefit from the change in the personal loan application flow. If I talk of the underwriting with the additional data pointing the availability from the various platforms like the marketplace, purchase pattern, return patterns, etc., the lenders can now underwrite consumers with alternative data as well. Further, the introduction of GST has allowed lenders to underwrite SME loans better using a wide range of models. However, every model relies on the stability of underlying data to predict a customer's default probability. The COVID crisis has, however, rocked the system due to several aberrations, delay in the GST data, non-availability of moratorium information with the Bureau, and various others. As underwriting becomes challenging in the short to medium term, we will move into the world where additional checks will be needed and supplementary information sought from borrowers to address risk concerns. Most lenders, it is believed, will use a hybrid human and machine underwriting model until they are confident that the macro has improved. Introduction of open credit enablement network, along with leveraging the AA infrastructure, are continued efforts to streamline, automate underwriting, and reduce turnaround time for borrowers. There's a long way to go to see how this plays out, but it's a step in the right direction. If I talk about the disbursements and repayments, these are the two aspects of lending where technology has played a crucial role in ensuring instant credits and debits. Borrowers are able to assess funds in matter of seconds. Lenders know on the due date itself how many borrowers have paid up and how many have defaulted, and therefore set up quick collection response strategies. Collection of dues from defaulting customers will continue to be hybrid. Lenders will need model to predict and identify high-risk customers, but will also need feet on street to visit the customers and understand the ground issues. The key to build a strong digital lending process is to find the right balance between the technology and feet on street. Illustrating all these issues, the future would hold more collaboration between the banks and fintech and NBFCs. As fintech continue to build technology that will allow SMEs and individuals to operate effectively through various platforms, the banks will have access to alternative data and monitoring that only new age fintech can offer. With the technology playing an increasing important role in lending, the onus on lending entities will shift from digital literacy to the financial literacy of customers. Digital lending is here to stay, but to ensure its success, what is needed are stronger guardrails from both a legal and compliance perspective. Will a digital loan agreement stand scrutiny in the court of law, or will the legal establishment demand wet signature in a physical loan agreement? While the infrastructure to answer this question is present today, the key, as always, is change in policy and mindset that can foster this transformation. With these words, I once again welcome all the eminent guests and speakers. I look forward for a fruitful deliberation and impact. Thank you. Thanks so much.
Thank you, Mr. Singh. Actually, we have got the information input from you, insight from you in a different angle. We are all bankers. We are getting something from a different angle and a different dimension you have given to the panel discussions. Thank you. Thank you for your contribution for the meeting. Thank you. Now it is time to start the regular panel discussion, the scheduled panel discussion. Conventional lending or digital lending. First thing a lender will look for is the report from the Credit Information Bureau. What is your CIBIL score? What is your Equifax score? So all these things will be asked by the sectors, whether it is a private sector or public sector, whoever it may be, they will be looking only for the Credit Information Bureau report first. So naturally, in the panel discussion also, we are going to have Equifax is one of the major Credit Information Bureau in United States of America and India. We have with us Mr. K.M. Nanaya, MD, Equifax Credit Information Services Private Limited, and country leader, Equifax India and MEA. As a part of this role, he is responsible for providing leadership and oversight for both the bureaus, ECIS and Analytical Businesses, EA in India. Prior to Equifax, Mr. Nanaya was associated with Renoir Management, a global consulting firm in the operational excellence space. Earlier in his career, Mr. Nanaya was managing director of Pitney Bowes, India, where he set up and led the country's business unit for over 10 years. He is credited with encouraging diversity at the workplace and was a member of the global Pitney Bowes leadership team. Mr. Nanaya is an MBA graduate and a rank holder from Mangalore University. Let me invite Mr. Nanaya to give his first round of remark for 10 minutes. We will have 2 rounds. The first round of remark for 10 minutes Over to you, Mr. Nanaya.
Thank you, Mr. Rangarajan, for an extensive introduction. So thank you so much. Good afternoon, Mr. Nanda Kumar. Good afternoon, Mr. Balvinder Singh, and good afternoon, Akhil. And good afternoon to everyone who are part of this event. And first of all, I'd like to thank ICC for organizing this event and also inviting me to speak in this event. It's always to be a pleasure on the ICC events. We've been in the past events as well. I'll cover this in three parts. The first part is to tell who we are, what we do as a company. I think Mr. Rangarajan alluded to about the role of credit bureaus. I'll possibly bring in a little bit more color in terms of who we are and what we do. The second part would be what are our views on fintechs as an industry leading to COVID and the post-COVID era, right? I think different scenarios are emerging. The third point is what are we doing as bureaus to enable the fintech ecosystem? I think that's these are the three broad segments on which I'll possibly spend a little time. Coming to the first one, who we are. So Equifax, we are part of a global Equifax Inc., which is well over 100 years plus company. Present in about 24 countries directly, and we're present through joint ventures in many other countries around the world. We've always been in the credit bureau business, which obviously speaks volumes in terms of our understanding of the credit bureau as a business, our understanding of the data, our capacity around analytics, our ability to deliver solutions to the lending institutions across the world, through the data and analytics and our technological platforms. So extremely rich background in terms of where we come from. And Equifax in India, we are about 10 years old. We got our license from Reserve Bank in 2010, and as we speak, 2020 is our 10-year celebration. So we completed 10 years in India. This has been an interesting journey in terms of how the bureau has been built. While globally we have three large bureaus. One is consumer, which is encompassing all the retail borrowings, which is all of us, you and I borrowing, will all come under the consumer bureau. Second one is a commercial, which is the borrowings by the MSMEs and SMEs and the corporate entities. And we also run an employment bureau in the US. So these are the large bureaus that we run in America. Coming to India, as I said, in the last 10 years, our journey has been fantastic because we're covering the landscape of lending in the Indian geography. When I say landscape of lending, there are three broad categories of lending in India. Starts with microfinance, which is a group-based lending, which is small ticket, group-based lending environment, very, very successful industry in India, built on proven models on group-based lending. So we have a bureau which is focused on microfinance. So we call that as a microfinance bureau. So this is a story of a bureau within a bureau. So that is a starting one in terms of small ticket ones. The second bureau that we have is the retail bureau. That is called consumer bureau. That is where I said, you and I borrowing for our, buying a motorcycle or buying a car or buying a house comes under the category of retail and the consumer bureau. And the third category is the commercial bureau, which is where the borrowing information of the corporates, SMEs and SMEs are all stored. So these are the three large data engines that we have from a credit bureau standpoint. We've also set up an employment exchange in India, largely works in a similar principles of a credit bureau where contributing entities use the data for the purposes of verification. So, but I'll talk a little bit more on the credit bureau side because that is relevant to the topic today in terms of the digital lending and the way forward and the role of fintech. So that's that's briefly who we are, and we have two large centers based in India. One is in Mumbai, that's where the headquarters is, and we have an advanced analytical center where all data scientists operate from. Truly in our business, data and analytics come together, and that's the power that we deliver to our customers. You need to have analytics to make sense of our data. So we have a very powerful advanced analytical center operating in Bangalore. And coming to our views on fintech, right? So broadly, fintech touches many aspects, aspects like payments, it touches credit, it touches remittances, it touches savings. So the fintech as a technology and digitization touches all these aspects. But I'll focus myself on credit. That's where we play a role. As Mr. Rangarajan said, credit bureaus are at the heart of the ecosystem. Whenever there is an application for a loan, lending institution naturally ping a bureau to get a credit history of the applicant. So we're at the heart of the ecosystem. We play an extremely important role for a healthy growth of the lending institutions in the country. Enable higher approval rates at lower risk is a broader theme that we follow. And globally, our theme is, our tagline is helping people live their financial best. So that's how we always think as to how are we contributing to the lending institutions, how are we contributing to the society in general. So I'll focus myself on the credit side of it. The general understanding of fintechs is limited to startups, which is not. The fintech cuts across all. Fintechs cut across the new age, lending institutions. It should cut across banks, NBFCs. It cuts across all these institutions. So fintech is not necessarily limited to a new age startup, which is normally the first recall. The moment we say fintech is something that has been incubated in the last 3 to 4 years. But in our view, fintech is applicable across the lending ecosystem, across the financial ecosystem. The fintech has a very important role. And the emergence of fintechs in the country has seen a significant growth over the last couple of years. What it meant is, improved financial inclusion, more importantly, access to credit. I think access to credit for those who had difficulties in accessing credit, I think fintechs have come in and have enabled that access to credit. To me, that is a significant contribution of the fintech for the citizens of India, and also to the growth of credit, and also to the economy. Now, fintechs have largely been playing in India on the microcredit side of it, which is small ticket loans. If you look at the data, the growth in PL, which is personal loans, compared to 2019 March to 2020 March, has been, in volume terms, it's 100% growth. The market technically doubled in terms of volume terms. And in value terms, the growth has been about 44% in volume, which obviously indicates the value has gone up 44%, the volume was 100%, indicates the ticket sizes of the loans were a smaller ticket size loans. So that is the nature of fintech's journey in India. It's always focused on, I think, significantly looked at the microcredit space in terms of what they can solve. So having said that, I think the fintechs are solving a lot of things which traditional bankers are in the process of solving or looking at solving. They are trying to solve things that have not got solved. So for example, fintechs do extend credit at the point of sale. Somebody is buying groceries in a supermarket at the point of sale at the billing station. One could even get an option of paying by cash, paying by card, paying by EMI. All these options are available, which was, in some sense, was unheard of a couple of years back. Never really thought of getting, credit so quickly. Credit was always going into a bank branch, to an office of an NBFC, applying for credit and then getting the credit. Fast forward now, you are buying something on the internet, on the e-commerce platform, you have options, pay, take credit, pay by EMI. All these options are available. Now, who is behind all this are the fintech companies. To my earlier point, I think the fintechs are really solving things which, rest of the banking and other lending institutions are in the process of solving, are also solving. But I think they approach that market from that point of view. And essentially, what runs at the back end of fintechs is the data and the technology. So it's an end-to-end technology, landscape that is required for fintechs to be successful. As Mr. Balvinder Singh, kind of covered it. The journey of borrowing, starting from sourcing to disbursement, starting from an application till the money gets credited into the individual's account, is the entire journey. But if you look at the journey consists of many different aspects of it. Starting from an application, what's an experience of applying on a fintech platform? Is the experience good? All of us, are in a hurry all the time. If you look at any of our desktops, there are 5 screens open, because we're simultaneously looking for information. If you don't get the information in first few seconds, you move to the next screen. So that is the expectation from the customers as well. If they are on a platform, they want to, apply for a loan, experience has to be, extremely good, should be seamless. So, but at the same time, if you look at the lenders, right, the expectations from the borrower is seamless experience. But at the same time, from a lender standpoint, it's extremely important to make sure that they have made the right judgment and then approved the loan and approved an application, which is an important step, from a lender's point of view. It's an underwriting decision, it's a lending decision. So they need to make that decision so quickly. For that decision to be made, what is important at the back end is a sufficient availability of identity verification, which is key because the identity of the applicant has to be verified. Then looking at the credit history of the borrower, if is in the credit ecosystem. If not in the credit ecosystem, are there any alternate data that can enable the lenders to make the assessment is also very, very important. Once the credit assessment is done, then look at running past their in-house decisioning models, right? Which could take in data from the application, data from the bureau, data from alternate sources, triangulate the data to see can this applicant be approved, not approved, if approved to what level, what risk levels, all of the decision. But remember, all this should happen in seconds and minutes. Just to give you all an example, the way we operate, because we come at some parts of that journey, we play at the verification stage as well, which is some KYC or a digital KYC. We do provide those kind of services as part of our bureau services. Then comes the credit information report. We respond back to an inquiry from a lending institution for a credit information report in sub-second. So that's how fast we respond back. Moment the ping comes for a Nanda, we are able to ping it, respond back with our credit information report, looking at the huge database in sub-second. So that's the power of the engine that we run to be able to provide that kind of response back to the financial institutions. These are key elements of the journey, key elements for success of a fintech in the country, right? How quickly the back-end technologies in the platform. Please remember, what they're trying to serve is the customer experience at the front end. Everything else in the back end is relevant, but at the same time, customer is expecting a decision. So either you give a quick decision, and for you to make a quick decision, you need data, you need insights, you need analytics to run behind the screen. So that is where I think we as bureaus come in. We play a significant role in enabling that kind of a decisioning. So the fintechs in the country, I think, has evolved significantly over the last period. As I said, leading up to COVID, the growth of fintechs have been phenomenal in the country. They are serving many different areas, whether it is, as I said, point of sale financing, there are PLs, or whether it is P2P lending or small ticket lending for SMEs. I think they're addressing many different aspects of the need for credit in the ecosystem. And truly, in my view, I think they're really enabling access to credit in the country. They're really playing a role in the broader financial inclusion that the government of India is actually driving and very focused on. And I think fintechs are also playing an enabling role in that process. And we as Bureau, we as Equifax, are playing at the back end to enable, to empower, and to power fintechs to be able to be successful and be able to progress very, very quickly. So that's the leading up to scenario. I think the COVID and the lockdown has, if I'm running past time, Mr. Rangarajan, show your hand. I will kind of slow down and wrap it up.
So next level, next another 10 minutes. The second round also we can come back.
Right. So I'll wrap it up in next 2 minutes.
Okay.
So the post-COVID scenario, I think the fintechs are likely to see potentially important role because social distancing and all that aspect. I think the digital becomes a very key aspect. So significant opportunity for fintechs and an opportunity for fintechs to participate in some of the government stimulus programs. I think that's a key opportunity. And also, I think they have a role to play in the economic recovery in the country. But what we also see is potential consolidation of the industry, right? Because fintechs are largely addressing the small ticket borrowings. Funding is a key issue. So there could be potential consolidation in the industry as well, is what we foresee. But their dependencies will always depend on the connectivity, the digital literacy, the financial literacy, the credit literacy. All of that have to come together for a success of fintechs. And from our side of it, I think we are completely geared from a data point of view, from an analytics point of view, and also from a technological platform point of view. I think Mr. Balwinder Singh talked about the entire decision journey. What you've done for the fintechs is to bring all that together in one single platform so that fintechs, they have an idea they can go live in a couple of days, because the entire engine for decisioning is cloud hosted, readily available, switch on, switch off. So that's what we bring, and we obviously power this platform with tremendous amount of data and analytics to make extremely informed decisions by fintechs in that shortest span of time that they need to respond back to their borrowers. So with that, Mr. Rangarajan, over to you. I'm looking forward to the remaining part of the conversation.
Thank you very much, sir. Actually, really, it's a very great thing that the credit information bureaus are playing, particularly in the retail sector, whereas the credit at the shops also, it is now possible. The retail credit expansion, the fintech expansion, all these things are mainly because of the quick response from the credit information bureaus, because that is the most vital thing. Because anybody who is lending, naturally, he will be recurring the repayment. Without repayment, lending will not be possible. Okay, so definitely you are having a major role, and particularly in digital lending. Your role, the Credit Information Bureau's role, is very good and very great and very significant. Without that, nobody can do any lending also. Thank you all. We'll anyway, and another second round is also there. There you can express the remaining things. Okay, thank you, sir. Next. The non-banking financial companies play a significant role in digital lending. As they have started their operations with the support of technology, they can quickly reach the customers digitally. We have with us Mr. BP Nanda Kumar, the Managing Director and CEO of Manapuram Finance Limited, who will share the success story of his company. Manapuram Finance Company is a leading gold loan company that is ranked among India's top 20 non-banking finance companies. Mr. Nandakumar took over the reins of the business in 1986 after his father expired. Since then, it has been a story of unprecedented growth, and his leadership was instrumental in starting the success story. Mr. Nandakumar promoted Manapuram Finance Limited in 1992, and today the company has a pan-India presence with 4,199 branches, including the branches of the subsidiary companies, across 28 Indian states and union territories. Recently, he stated the company's diversification into microfinance, vehicle and housing finance, and SME lending also, where a successful start has been made. Mr. Nandakumar's achievements in business have earned recognition at the national level. In January 2014, Business Today, a leading business magazine, ranked him among India's top 100 CEOs. In December 2013, Business World had listed his name amongst India's most valuable CEOs. Mr. Nanda Kumar is a managing committee member of the leading trade and industry associations such as ASSOCHAM and FICCI. He is the chairman of the Kerala State Council of Confederation of Indian Industry, CII. Mr. Nanda Kumar holds a postgraduate degree in science with additional qualifications in banking and foreign trade. He has attended management development program for CEOs at IIM Ahmedabad and IIM Bangalore. In December 2013, he took part in Global Strategic Leadership Program at the Wharton Business School, Philadelphia, USA. Let me invite Mr. Nanda Kumar to give his first round of remark for about 10 minutes. Over to you, sir.
Thank you, Mr. Regarajan. A very vast and extensive introduction. So, yeah, good afternoon, Mr. Danaya, Mr. Akhil Hante, Mr. Balwinder Singh, of course, Mr. Regarajan, and all others, all the participants. So, I have attended many of the conferences of the organized ICC, but webinar I am participating for the first time of that ICC. Yes, it's a good opportunity. So now everything digital, and we look forward that this is going to be the new normal. So Mr. Danaya has talked at length about the bureaus, how effective, how important is their role in modern India, digital India. In the lending space. As a lender, we are all using their services in a big way. And Mr. Balwinder Singh narrated about what is the industry today, what is going to be the industry today. So a lot of deliberations about digital lending has been made, which are very, very useful for everybody. In the opening remarks, Mr. Regarajan has mentioned about the farmers, even the farmers using the digital space for payments as far as various payments options they use. They have their own groups in the social media, so that today even a semi-literate a farmer is in use of these digital operations, and he is well versed. So even the patients, particularly during this lockdown, etc., and also because of the because they are afraid to go to hospital. So that opened an opportunity for online consultations. Now online consultations are growing in a big way. So the e-commerce and pharma distribution online, etc., are really catching fire post-lockdown. So these are going to be the normal in future. Today we are able to meet. I need not come to Calcutta for attending such a seminar. So and for ICC, etc., to conduct a seminar has become very easy. So coming back to a few things what we use in our microfinance business, in our subsidiary Ashirwad Microfinance, which is the fourth largest microfinance industry in the country. Let me start with that. As Mr. Nania has said, yes, we assess the customers that we are using the bureau data, because otherwise we don't know how many loans they have taken. How many loans they have taken from various companies? How do they leverage, etc., etc.? As a lender, these bureaus help us to protect our assets, asset quality. So it plays a very important role. So in our core business, which is around 70% plus of our portfolio is gold loan. Yeah, we are the first gold loan NBFC in the country. being the first gold loan NBFC in the country, which is there for the last 25 years. We had innovated a lot in our penetration. We have for gold loan alone, we have 3,600 branches spread across the country, and our success is mainly because of the technology and digitalization. We have from 2015 we have launched a product where the customer is given free safe custody of his jewels, or rather we can say locker facilities, absolutely free of cost. Not only that, 75% of the value of these jewels are given as the drawing power to him. As and when he wants, he can withdraw the money from anywhere, 24 hours, and service the loan from anywhere. So this has actually transformed our gold loan segment, which was otherwise the thought of a distressed product. Now it is slowly growing as a lifestyle product. Lot of middle class, lot of traders use this for their working capital purpose. So the advantage is the customer has always the comfort of having the liquidity without paying for it. Only when he uses the liquidity, then only he needs to pay for it. So this is helping us. Another thing what we are doing is now everyone is doing is the digital marketing. Not only digital marketing, yes, when a customer is there, then through the multi-channel communication systems, the customer's requirements are met. The concerned people are informed. So through the digital medium, the media, the customers are acquired. Then from that time onwards, the company can start communication with him, which is never ending. We can understand his needs, etc. etc. So based on that, which are all our services, various services, and we are doing to him. So this is the advantage for him. So we have seen during a lock-in period, we have seen some of these were our experience for the first time. We have this online gold loan now for quite some time, for 2-3 years. But during lockdown, we have seen the customers who doesn't have any opportunity to borrow. Whatever the drawing power available in their loans, we have seen they use it. Now what we see is even on a Sunday or a holiday, hundreds of transactions are taking place. Now, based on the transaction, we are able to track his transactions continuously, and after a transactional analysis, we are able to lend him. This makes the lending comfortable, easy. We have the data. We digitally track it. So as a lender, these are some of the opportunities we enjoyed. So we have discussed about how the credit available to only to the formal sectors, where their income proof, everything is already there. It is also moving to the cash economy. So there are in a country like India, the informal economy is very large, and it is a large section of the population is living in that economy. Even now, for them, getting a formal credit was not that easy. Now, because of the analytics, as Mr. Nanda has mentioned, they also get the opportunity. So the bureaus assess his credit quality based on transactions regularly, and his lending options are consistently upgraded and even yeah, he gets from the largest banks in the country that after some time at a lower rate, etc., etc. This helps him to bring the cost down also. This has actually helped the customer also to remain disciplined. That also is a very important thing here. So the future of India, definitely the digital space is growing like anything. Digital Bharat. In that, a very large role will be played by credit institutions, lending institutions, and the weaker sections also are going to be very much benefited. As mentioned earlier, also the farmers are included now. The economy has included them. It is an inclusive economy. So for an inclusive economy, the digital space is very, very vital. And for every crisis, there is an opportunity. This Corona 19 post lockdown, it has opened a vista of opportunity in digital accession. Even before that, the government was talking about digitalization, its vision, etc., etc. So as we have started little early, it has really helped the economy during this pandemic. So thank you once again for the opportunity.
Thank you, sir. Yeah, literally a bank which is based in southwest of India is doing wonderful pan-India. In fact, I was the zone manager of Eastern Zone of Indian Bank, and I have seen your presence nearly, I think, around 8 branches in the Northeast also. So we used to tell our branch managers, the public sector bank, the bank managers, why don't you expand your loan, the gold loan? Even they are not able to sell the gold loan, but how Manapuram Finance and Muthoot Finance are able to sell the gold loans. Now we are able to find out what the trade secret. You are using the analytics, you are using the digital, you are using the customer comfort, everything. Definitely, these will be a guiding factor for everyone, and definitely the business will grow. And not only it's a win-win situation for both the lending institutions as well as the people who are availing the loan. 2 minutes loan, all these things are possible with your guidance and with your support. Thank you very much. We'll come once again to you for the second round of discussions. Yeah. Public sector banks are now lagging behind in digital enablement of various services. With the amalgamation of Dena Bank and Vijaya Bank, Bank of Baroda from 1/4/2009, with Bank of Baroda from 1/4/2019, large-scale digitization happened in Bank of Baroda. Keeping IIT as knowledge partner, lot of innovations is being done by Bank of Baroda. The main person behind is Mr. Akhil Handa, the head Fintech, Partnership and Mobile Banking and Digital Lending Department, Bank of Baroda. Mr. Handa is helping with the digital strategy of the bank with a view to transform the bank into leading digital bank of the country. Mr. Handa has set up the Fintech and New Business Initiative Department at the corporate office of the bank, which is leading the charge, to partner and co-create with fintechs across India, and is considered the early mover in fintech in India. This was the first fintech vertical amongst all public sector banks in India. His areas of interest include digital bank, payment solutions, payment bank, contactless cards, algorithmic underwriting, advanced analytics, API banking, etc. Mr. Handa has spent over a decade with varied emerging digital technologies, started up twice a fintech and media tech company, donned analyst hat at JP Morgan, and led some of the Prime Minister's digital initiatives. He is a BTech in chemical engineering from IIT Delhi. Let me invite Mr. Handa to give his first round of remarks for 10 minutes. Over to you, Mr. Handa. Mr. Handa? Sir, I think you have to enable your mic and video.
Akhil sir, we can see you.
Yeah, now it's okay. Yeah, we can see him now. Voice is not coming. Harsh, can you help him?
Yes, sir, we'll try.
There are 135 participants. Yes, Mr. Handa, we are able to hear you now. Please start your video.
My video is on, Mr.
Yeah,
Rangaraj.
now I am able to see you.
Fantastic. Well, thank you very much. And you actually the panelists ahead of me, Mr. Nanaya, Mr. Nandakumar, Mr. Balwinder Singh. Thank you very much. You've actually done my job and simplified it to a great extent. There's little for me to add to the distinguished.
Yeah, you can, suppose if your bandwidth is not okay, you can switch off your video and we want to hear you. I think your bandwidth is low.
Yeah, sir's bandwidth is just a little slow. So Akhil sir, I would request if you could just switch off your video and then try to speak.
So we had to pass challenges also in digital. So, and you can connect to your mobile also, not an issue. If your office system, if it is not able to connect it, you can connect it through your mobile data. That may be faster. Now, if it is going to be longer, then we can ask Mr. Nanaya to continue and he can complete his first and second session together. Is it okay, Mr. Handa? Yeah, well, let us not waste, lose our time.
Mr. Akhil sir is trying to rejoin again. So, sir, I think you should continue, sir. And then when he comes back, you could go back to him.
What is that?
Akhil sir is back again.
Okay, right, fine.
Okay, I'm back. Sorry, am I audible?
Yeah, you're audible.
Okay, I just changed my network.
Okay, fine.
And I don't.
Still, we are not able to hear you. And now it is okay. Break is there.
Okay.
You cut off your video. You speak.
Okay. See, now, overall, I wanted to just give a view of where the ecosystem is going to go over the coming few years. Now, see, we are all aware that digital lending has been in the works over the last 5 years in some form or format. So it has been there since I would call it about 2015. And the first one was actually led by the fintech companies themselves. So fintech companies led the whole bandwagon to show us the path on how journeys can be redesigned and customers can be engaged at the point of sale, at the point where at the time of their choosing, at the place of their choosing, in the comforts of their home. Now, this is something that the traditional institutions and banks, particularly, were not really so upbeat with or up to date with to begin with. But I would say that the biggest service that fintech companies have done is actually helped challenge the existing financial institutions to come up with a new model. Now, in the first phase, which I call the digital lending 1.0, roughly between 2015 to 2020, there were a range of innovations, and these innovations largely came from fintech companies. Like there were P2P lending, there were quick settlement loans, buy now pay later facilities, Diwali loans, and even COVID we've seen anti-lockdown loans. In fact, gradually over the last phase one, banks then started noticing this. And they have also embarked on digitizing more of their processes. In fact, the few examples that come to mind when we talk about the key success stories of digital lending have been: one is PSB loans in 59 minutes. There is trades. And then there is marketplace finance systems that are being set up by a few lenders. Now, as some of the listeners would know, PSB loans in 15 is an initiative by all, and this provides for retail and MSME loans in 59 minutes. Now, there are roughly about 10 steps in a digital lending journey, depending upon what product we look at. And I would say there is no single system or platform or institution who's been able to digitize all 10 steps at scale. But there are institutions that have been able to do it for certain swim lanes, certain products, and certain customer journeys. And as we have more ecosystem enablers come into, I'm very confident that digitalization index of loans will only increase from here on. In fact, you would, as I was, when I looked at the data, that almost 15% of Bank of Baroda's loans that we book today are digital in nature. That's 15%. Right? Now, the next phase will be the phase that we are in, which is 2020 to 2025. And this is really digital lending 2.0. And this will be accelerated adoption of digital lending, and COVID will only provide a step change now. In fact, during the last 4 years, I have seen certain changes that have happened that I have not seen a faster adoption of those systems my tenure anywhere. And this has only been made possible for the urgency that COVID brings in. In fact, in the digital lending 2.0 phase, I believe there will be a lot of things that will be a little different from what we saw in phase 1. The key amongst them will be there will be ecosystems that will get connected to the financial systems for lending journeys. The digital lending will see adoption beyond the tier 1, tier 2. There will be more infrastructure enablers that will come in place. There could be digital land registries. There is account aggregator frameworks. There is Ocean that is not being talked about. And also large financiers will come into this space. So up till now, what was, I would say, the domain of fintech companies, the more agile companies, I think the large companies, the large financiers, banks will also come into play and help scale the entire digital lending initiative. But most important of all, I believe the government of India and will firmly put their weight behind digital lending. And from what I see, it is already happening. Now, it is not to say that the journey will be all smooth. As I said, there are roughly 10 steps in the lending journey. And I believe, depending upon the product, if you're able to digitize even 3 to 4 of them, it is a very good starting point. But the journey will not be smooth going forward. We will, in a digital model, let's say there is a completely digital model we have, and the institutions at scale start booking thousands of loans every day in a completely STP way, which means the borrower has not even visited the institution, or no one from institution has met the borrower. This will call for new risk models. We will also need to have digital collections for digital loans. The linchpin of the entire digital lending journey will be analytics. Analytics is the basis of analytics, the raw material is data. Today, only 16 to 18 million MSMEs out of the 75 million MSMEs have any sort of digital presence. This, of course, is rapidly changing with GST, with formalization, more digital adoption, the digital payments adoption. But it is a journey. And finally, the ecosystem enablers that I talked about, I firmly believe that more ecosystem enablers will come in place, which will together help achieve the objective of digital lending. And if I put 2025 as the marker, I believe anywhere between 55 to 75% of the loans that get booked will be digital in nature. With that, I end my opening comments.
Okay, thank you, Mr. Nanda, a most positive banker, and digital lending 2.0. That is the future mode of the lending. He has explained it beautifully, and really it is going to be an eye opener, and it is going to, whatever he said, all the 10 processes, if they are going to be digitized, definitely we will be having 100% digital lending in India. Now, after the first round of deliberations by all the 3 panelists, we have now got a fair idea about digital lending. How it is now, how it is going to be in future. So we have heard from the 3 panelists different thought process based on their work environment, their business processes in their organization, and their rich experience over many decades. Based on the first level of discussions, each and everyone will have some more points also for the benefit of about 150 people who are participating in this webinar. And we will have a quick second level discussion of 5 to 10 minutes for each. Let me first invite Mr. Nanaya for a second level of discussions. Thank you.
Oh, thank you, Mr. Rangarajan. And just continuing on, kind of left on digital 2.0. I think very interesting approach, and I completely agree the viewpoint that Akhil was alluding to in terms of various steps that are involved in the whole digital journey and how some of those processes are still to be digitized. And I think quite a lot of that came into forefront in the COVID times. Are we truly digital? Are we partially digital? Is our straight-through process completely digital? I think the entire digital story got truly challenged during the lockdown, and even now it's getting challenged. So I think that's a very important factor to be considered in the entire digitization journey that we'll be talking about. So, I think we're all playing a significant role. I think Mr. Nandakumar alluded to how data is helping them make decisions, how they are able to, serve their customers, technically 24/7. It could be a weekend and holiday still. I think the entire digitization and the data and analytics backing that is really helping Manapuram to make those quicker, efficient, and faster decisions. And without any this thing, I think data and analytics stay at the cornerstone. I call them as corner pillars of the entire fintech journey, and which is extremely important. Just coming to the analytics piece of it, we play a significant role to bring in some of the aspects of analytics, so which is machine learning and AI, so that the systems can start to learn based on the transactions and modify the rules that are required for quicker decisioning. So the play of ML and AI is coming in. So we have actually launched some of our first models which are running based on ML. Obviously, these are initial stages specific to test models which are running on ML. But we have launched that, and as we progress, I think we will improve. We will improve on that. And Pitneyboss globally has some of the patented technologies around neural networks that we've rolled out. So we're investing significant amount of money on innovation and on transformation to see how we can enable the entire fintech in the journey, both from data analytics and a platform standpoint. And the other aspect of the fintech, which I think we should also reflect, is the regulatory framework requirement. I think if you talk about the broader fintech growth in the country and the future growth, I'm sure Akhil and Mr. Nandkumar will agree that for digital 2.0 or a fintech 2.0, I think the regulatory framework also becomes extremely important to ensure that the fintechs are able to grow alongside. And the third interesting aspect of it is will fintechs compete with traditional bankers, or fintechs collaborate with traditional bankers, or all will adopt technology? At least from what you hear from Akhil, is that the adoption is increasing, and X percentage of their loans are already booked via the digital platforms, and expecting a significant growth by 2025 is a very encouraging outlook in terms of, at least tend to believe that I think the fintech adoption will cut across all the lenders in the geography. My view. So I think if you were to look at this in kind of three parts, The entire technology, data, analytics is one part of the regulatory framework is other part. And the last part is obviously the financial literacy, the digital literacy, availability of connectivity, and understanding of credit literacy is very, very important. And we are doing a lot of work around all of these areas as we speak today. And as I said in the opening remarks, we have digital platforms which have been rolled out, which significantly addresses the broader 10 steps that Akhil referred to. We've tried to solve most of those steps from a digitization process. It's a single stop solution for complete digitization. In our own terminology, we call it as interconnect because it connects all the dots. That's why we call that solution as interconnect. It is a cloud hosted solution. Technically, in every sense of it, it solves almost all the 10 steps that Akhil referred to. I think the latest one to be solved and which got more attention during lockdown is the digital KYC piece. While everything was digital, suddenly all of us have realized that the KYC was still a very physical in nature. So even that has got digitized. So KYC, digital KYC, which meets the RBI norms in terms of the requirement, is also available as we speak. Today, we are continuously racing with the needs of the industry, like expectations like from Manapuram or Bank of Baroda. We are also racing as a bureau to see how we can provide solutions, how we can play that enabling role in the whole process. And the last thing is, as we travel this journey, we've also just rolled out a Fintech Pulse report. This is the first of its kind that we have rolled out in the country. This is in participation with SIDBI. So this is going to be a quarterly publication. We will try and bring in insights about the fintech industry, the journey, the things that are changing from a technology perspective, the market perspective, the payer perspective, the regulatory framework perspective. This is being brought on the back of a very successful publication that we bring on microfinance, which is called a Microfinance Pulse Report. So Microfinance Pulse Report is on the, I think, 5th edition now, which is again a quarterly insights report, which we bring about the microfinance as an industry, both from a practitioner standpoint and also from a regulator standpoint. So the Fintech Pulse Report, which we rolled out about 2 weeks back, is also aimed at the direction to bring insights to the industry and also bring in our learnings and of the practitioners onto that publication. So the first publication is out. It is available on the websites for a quick read. It's a short, data-based kind of a report. So we're working towards the overall development and just to the point on analytics and data science. We work very closely with Manipal University to have a co-sponsored program on data and analytics. So which will enable more data scientists coming into the industry, which is the need of the industry at this point in time, because we have significant data. We all have to make sense of the data, and data scientists are a very important role to play. So we're working in the ecosystem to see how, to my point, we can play an enabling role, not necessarily just limit ourselves to providing either the credit information report or the platforms or the technology. So we're bringing in insights, and we're working on the talent side of it. So I think Equifax is very, very committed to the market, very, very committed to participate in the journey, very, very committed to play that enabling role in the country for greater digitization, increased credit penetration, and higher access to credit in the country. With that, over to you, Mr. Rangarajan.
Thank you very much, sir. Anyway, I'll come back to you with some questions from our participants also. See, one more information to the participants. See, there are the second level of discussion will be with the other two panelists, and there will be whatever the questions you are giving in the chat window, we will be asking the panelists. You can mention the panelist name also. We can address to the panelist, and we can get a response. You will not be able to interact directly like what we used to do in the seminars. Here it is, you have to enter in the chat window, question answer window. Thank you. Now let me invite Mr. Nanda Kumar for his second level of discussions.
So, two stalwarts, Mr. Nania as well as Akhil Kante, of the digitalization era, particularly in lending space, have talked at length about that. So, it's a good learning for all. So, as have been said, data is important and going to be very, very important. So data analytics, with data analytics, yes, several models can be created, and the use of this output, that is most critical. All the more important is the execution of these models. What I find is a blue ocean now in the BFSI digital lending space. There are a very large section of unserved population in the country. To penetrate that and also to protect the asset quality, this is going to play a very important role. So, one of few initiatives we have done in the recent past is doorstep loan delivery at doorsteps. In cities like Bangalore, if a customer needs a loan, urgent loan, he cannot come to our office even at 12 o'clock midnight. On information, we go there. At these doorsteps, we do the entire KYC and all processes, and the money is dispersed at these doorsteps. So this has been enabled only by the digitalization. Another thing, we do instant unsecured loans to our customers. We have the data over several years. This data is properly analyzed. His bureau score is also compared, and it's already there in the data. So these customers, any of these customers wanted loan at any time, even the documentation is digitalized. So now 24 hours the loans are available. And we have assessed the quality of this period. Yes, even post this lockdown, then there's a pandemic, during this pandemic period also, we have seen the quality remained very high. So what I want to emphasize here is this data has a big value, and the data analytics play a very important role, and the execution to the and targeting the right audience is key. I stop it here.
Thank you very much, sir. Now, I'll request Mr. Nanda to go for a second level.
Thank you. Now, look, as I said, from my first opening comments, effectively digitization is here to stay. It will only accelerate. Now, I do believe that there will be a very sharp division that sets in between lenders that are digital in nature, that are perceived to be digital in nature, and the lenders that are looked upon as traditional. This
Mr. Nanda? Mr. Nanda? No, we are not able to hear you. We are not able to hear you.
Nanda sir's internet bandwidth is causing the issue again.
When you switch off your video, audio will be clear. If the bandwidth is not fine, Harsh, you have called already him?
Sorry, sir.
You have already called Nanda? Yeah. You switch off your video. Yeah, he is connecting again.
Okay, sir.
Hello?
Yeah, please go ahead.
Okay, I'm so sorry. We're talking about digitalizing, and the first thing that doesn't work is my network here.
Whether network is sufficient to take care of the future digital lending, that is also another question.
No, that in fact, yeah, no, network is a big, massive issue,
Yeah.
and you'll be surprised to say, we depend so much on OTPs, but roughly there is a fail rate of between 10 to 15% of OTP rate, right? So there's a very severe network issue, and of course, as more bandwidth gets occupied by all this by the OTT platforms, etc., there will be more pressure on networks. Nonetheless, so before again I lose you, let me just do my comments here on what I think.
Yeah.
How will Bank of Baroda be able to support that the whole mission? Now, to begin with, you would have recognized that one of the portfolios that I handle is the digital lending department, and that I believe is the only department set up targeted for digital lending in the Indian banking industry today. And the focus here is to digitalize our retail, MSME, and agri portfolio and deliver customer journeys on these three segments. We have roughly 3 lakh crore of business in these three portfolios, and we believe by powering it through digital lending, we'll be able to double it over the next 5 years. Right? So those are high level numbers. Now, as I said, one of the things that I certainly believe will happen going forward is customers will differentiate between lenders that are perceived to be digital and lenders that are perceived to be traditional. And that will have ramifications in terms of customer selection, in terms of the yield on portfolio, our pricing power, in terms of the credit cost that we see. It will have ultimately it will have an impact on the bottom line of the financial institution. So it is not just a good to have for a financial institution; it is a must have. And that must have is effectively what we all of us need to sit up and take notice. And I think most of us are aware of the opportunity ahead of us. Now, for Bank of Baroda, today I can tell you a couple of things that we've already done. We have a very large debit card portfolio, almost 5.5 crore customers on the debit card. Now, what we've done is we've turned the debit card into a credit instrument, which means today a sizable portion of our 5.5 crore debit card customers can use their debit cards and on the fly at the point of sale terminal or online when they're doing an e-commerce transaction, they can take a small ticket loan from us. All of it happens within the seconds before the transaction times out. That is the kind of infrastructure that we have built. We are also digitizing, many of our other pools like auto loans. We are looking to digitize the mother of it, which is the home loans. Interestingly, perhaps for Mr. Nandakumar, we are also looking to put together a digital gold loan journey, and we hope that we'll be able to do it as good as he does going forward. So that is effectively what I wanted to say, that we are fully committed. We believe that there's a significant opportunity We would like to remain in the lead and shape the ecosystem going forward. And I believe Bank of Baroda, given the vantage point that we have, and given the social responsibility that we carry, we must do it for India.
Is it over, Mr. Nanda?
Yes.
Yeah. Okay, thank you. So we have got some questions also from the participants. So now I'll first give a summary of whatever we have discussed today. First of all, let me thank you, the panelists, for your valuable knowledge sharing. All the panelists are of the view that digital lending is the future, be it a public sector bank, be it a private sector bank, or be it a non-banking financial company, or new generation small finance bank, or even cooperative bank or regional rural banks. But the ecosystem surrounding the lending system should be digitized and integrated like what we have in respect of GSTN, PAN, CIBs. In fact, Mr. Handa was describing about the only some few items are integrated for loan processing. So rest of the things are to be integrated tightly. The government also had to initiate, and the departments also have to initiate for integration. This is the need of the hour. Integration with the lending system, it has to be there. COVID has made awareness and necessity for digitization, and everyone is aligned to it. Before we take up the question answer from the audience, we have some questions from the ICC. First one to Mr. Nanda Kumar. With the low economic activity, extension of moratorium multiple times, low level of resources for lending, expectation of huge NPA post-moratorium, do you expect credit shyness among lenders or active credit dispensation? Mr. Nanda Kumar?
Yeah. The extension of moratorium will put all the lending institutions into difficulty. So many of the customers will, when they find this, many on a misconception that there will be some waiver somewhere, interest or something. Others want to delay. These customers, many of these customers, particularly I'm talking about those customers, marginalized sector. They defer the payment, everything will get accrued, installments will accrue, even restructuring can be done, etc. Installments will get extended. These are going to put them into difficulty. And the asset quality will definitely deteriorate, and what the government, what the RBI should do is allowing restructure, not extending moratorium. Moratorium will be really harmful to the entire lending system.
So you expect the lending, the credit shyness is there, or credit pickup will be there?
Right.
No, are you expecting a credit pickup or credit shyness?
So there are multiple pulls coming from various sections of society, the political will, etc., etc. So in such an environment, there is an uncertainty even now.
Okay. Yeah, there is a question from a participant, one of the participants. What sort of loans public want other than jewel loans from Manapuram Finance?
So Manapuram offers microfinance through its subsidiary called Ashirwad Microfinance. As I have mentioned, that is the fourth largest microfinance company in the country today. Apart from that, through its subsidiary, it offers affordable home loans and also vehicle finance, two-wheeler as well as commercial vehicle loans. So 30%, around 30% of the portfolio is non-gold, spread in these segments.
Okay. Another question for you from the participants. You are very successful before fintech. What is the key to your success?
See, it is a team's, yeah, it is the combined work of a team, cumulative effect of a team. So we have people with diverse interests, diverse capabilities, etc. The success is pulling in all these, and with a single-minded, with a single-minded objective of carrying this forward to something what we want to achieve in common. Leading that definitely makes anybody successful.
Thank you. And one more question for the participant. There are some institutions offering the courses for the fintech. Whether Manapuram Finance will do any engagement of those people passing out of the fintech, or whether they will be able to support the people coming out of the organizations, institutions.
Yeah, we do this. We have a skilling academy here using our CSR. We also fund some of these initiatives. It is already there. Yeah.
So it's a type of the information center or something like that?
Yeah.
Okay.
It is
Okay, thank you, sir.
Yeah.
Thank you. Another question, question to Mr. Nanaya. How far AI and ML solutions going to help the lenders? Do we have sufficient data to determine the creditworthiness? Credit information bureaus can expand their activity since they are data rich.
Certainly, I think it's a very long question, 2-3 parts to it. There's the question around the AL and MI. As I said in my second part of the presentation, that we are using ML, but having said that, in building risk models, we need to make sure that compliance is at the cornerstone of everything that we do in terms of how we build the models. And all of you would know in AI and ML, self-calibration of models can happen because of the technology platform. So it could be, it could start with batch refresh and go on to the next levels from an AI and ML standpoint. But there are various different use cases of ML and AI in the entire lending journey. Not only on the risk side of it, but there are other areas where AI and ML could be extremely useful. We are absolutely looking at the AI and ML from a platform standpoint. To other part, do we have data to assess the credit history? As I said, we've been in the country for 10 years, so all the lending institutions submit data on a very regular basis to us. So we certainly have the data which is being submitted by all the lending institutions to be able to provide the credit history back to the lending institutions as and when they request for one. So we do have that credit history. I think the last part of the question was the role that we can play, Mr. Rangarajan.
You can expand your activity since you are data rich. It is not only the credit information. You have said that you are having other variety verticals also.
Yeah. So credit information bureaus has to be seen in the context of the law in which we have been established. So we have been established under SICRA. So we will always operate within the framework of that regulatory framework. So services that are defined by SICRA is what we will do, and that is what our role would be. So everything connected to lending institutions who are contributing data are the ones who have access to the bureau. So SICRA clearly calls out specified users who can use the bureau, who can access the data from the bureau, and they will get all the services from the bureau. And rest of all is a consent framework that we operate on. So it's broadly governed by the framework under which we operate.
Thank you. One question from participant. Sometimes the loan applications are rejected due to data deficiency. Does Equifax make that up through data mining?
So data to the extent that is available in the bureau gets presented back to the lenders. Again, we do not enrich the credit information report. We all must remember credit information report is an aggregation of data as presented, as contributed by the lenders to the bureaus and presented back. So the question of enrichment does not happen on the credit information report. It is the data as submitted by the lending institutions gets presented back to the lending institutions. What we do is to bring all the data sets together from all different lending institutions over a period in time and presented in a single format back to lending institutions. So that's one part of it. But I think lending institutions and fintechs are also looking at various alternate data sources to be able to address some of the new to credit opportunities who are not present in the bureau. So there's a lot of work that are being done in the industry about the new to credit as well.
Yeah, another common question, of course, I ask, it is a common question for all the three panelists. What is the future of the students who are doing courses of fintech in the institutions? Whether civil will be, whether ICFAX will be supporting them in any way?
Certainly, what we do is to, as I said, we have co-branded programs also with Manipal for data science. We certainly, on a regular basis, keep hiring. And in my view, in a broader sense, if I were to comment on data science, I think it has got a brilliant future going forward.
Okay, thank you. This is to Mr. Nanda. Many banks are extending credits even for a weak proposal backed by the sovereign guarantee. Whether it is preferable to lend such a loan or park funds with RBI or government securities at lower rate to avoid NPA in future.
See, we take all decisions based on commercial considerations. And ultimately, we can talk about peak limits, but does the business environment today really justify any peak limits? And for some categories, for some verticals, it may be the case. For others, it may not be. And I think all of it is really governed by what an individual industry cycle is at this point in time. We absolutely want to deploy funds in commercial proposals. And only in the absence of that do we go for parking funds to alternate sources.
Okay. So the question which I addressed to Nanda Kumar is addressed to you also. With a low economic activity, extension of moratorium multiple times, low level of resources for lending, expectation of huge NPA post-moratorium, do you expect credit shyness among the lenders or active credit dispensation from a public sector banking view?
No, look, see, again, my answer remains the same to the previous, as I made to the previous question. I mean, look, the banking sector today is surplus funds, sitting on surplus funds right now. And we absolutely want commercial propositions. And, if there are good quality borrowers, good projects that are coming up to be able to fund, I don't see why lenders would shy away from it. Lenders would wholeheartedly support it. In fact, during COVID, there have been cases where we've actually seen pickup of activity, and we are stepping up to the best of our abilities to support especially the MSME units, and we'll continue to do that.
Thank you. There is a question from a participant. What kind of innovation have Bank of Baroda done in fintech?
Oh, there is a very wide question. Okay, so I can broadly classify that into I like to classify into 5 categories. There's retail fintech, retail lending fintech, MSME lending fintech. Then there is agri-tech. We have a very large agri portfolio also, and there is financing requirements for there. And we've done quite a few number of things in agri-tech. Then there is wealth tech. In fact, our robo-advisory platform in the bank today is powered by a fintech company. And then there are payments and technology and other experimental technology like blockchain. Underlying all of them are substantial assets that we've built. We have an analytics center of excellence, that's our data lake. We have an IT center of excellence, which is for our development needs. And you talked about the IIT Bombay Bank of Baroda Innovation Center, which is dedicated to fintech collaboration, where Bank of Baroda brings in the BFSI domain and IIT Bombay brings in the tech expertise. And together, in each of these 5 verticals, we've done more than 40 initiatives. And they range from algorithmic underwriting to alternate data-based underwriting to marketplace funding. We've in more experiment technologies, we've also done a sounds-based technology. So using your mobile phone, you can actually transact with the POS terminal on the back of ultrasound payments. So it's a very wide spectrum, and being a universal bank, we have the obligation to push the frontiers in each of our subdomains, and we continue to do that, and we will keep on doing that.
Yeah, final question from a participant. What is the future of students of fintech? Some institutions have started courses in this. I asked the other 2 members also. From Bank of Baroda perspective, please respond.
Look, I think fintech overall, we have, depending upon who you talk to, we have between 1,500 to 2,000 fintech companies in India. And I think
I'm talking about the students who are learning fintech courses in institutions.
Yeah. So, which is what I'm coming to. And I think over the next 5 years, we will see maybe 5,000 new fintech companies set up in India. And all in each of the I would say sub domains of BFSI industry, there's a lot of innovation happening, and in each of the features, in the entire value chain of payments, lending, wealth management, markets, there is innovation happening, and there's a lot of scope for innovation going forward. So students who are studying fintech in their undergrad, in their graduate courses, I think they have a very huge scope to participate in this revolution that is going to come upon us. But I would also caveat that by saying that it is very necessary and important to have some sort of experience, first-hand experience in the BFSI industry before you start up. So this is a slight divergence from an e-commerce entrepreneur who can start a company from his dorm room. Finance, generally, you will be your chances of success will be a lot higher if you jump into entrepreneurship in fintech with some expertise or first-hand knowledge of some domain.
Okay. Thanks a lot. In fact, it was a very knowledge-sharing session for the entire team and participants. And in fact, I had to thank Mr. Nanaya, Mr. Nanda Kumar, Mr. Akhil Handa, Mr. Balvinder Singh, and all the participants who have spent their time with Indian Chamber of Commerce and had a very knowledge-sharing session. And it was a very nice session, and we have got a lot of inputs from different spectrum, different set of people, different areas of operation they are coming from. So definitely it is going to be a good takeaway for all of us. And thank you very much once again from the Indian Chamber of Commerce. Thank you all.
Thank you. Thank you very much.
Thank you. Thank you. Harsh?
Yes, sir.
Yeah. Thank you so smoothness.
Everything was smooth, sir.
Okay. So you have made any recording of this?
So it was already on YouTube Live, but the recording will come out in at least 24 hours, and once that is out, we'll
Okay.
do that.
So you share the link.
Sir, it was excellent. Thank you.
Thank you. Thank you. Rajashi.
Yeah, it was opening match for you. So first match a century.
all your support and blessings.
And now it's the beginning of a new journey. And
Yeah.
next step would I would like you to be a guest faculty other than other programs. I would other than article. I would like to be as a guest faculty in the applied banking course,
Okay,
which
sure. Sure.
Majumdar has shared with you. Majumdar has shared with you that course, I believe. Some of the courses.
No, I have not received anything.
I think not today. Okay, he will share with
Okay.
you these courses. I would like you to
Okay.
be a guest faculty.
Okay. Actually, the chat window I'm not able to see in full. That is why I asked you to share. Chat
Okay.
window scrolling
You
is
saw
very
some
difficult here.
questions. I shared some. All questions were covered. All were covered.
Yes, yes. Okay. Some of the questions finally when it came, I'm not able to talk to the people also.
Sir,
Okay.
I'm closing this event. Then there are other audience also, so I'll
Yeah.
just end the event.
So can you copy for the future thing also, Harsh? Whatever the question answer that is coming, can you copy and paste it somewhere and send it to me by WhatsApp?
We'll do that, sir.
Yeah, that is possible, I think, because chat window the scrolling is not that much fast enough. It's not going also, and the focus is
Noted,
also
sir.
missing. Focus is also missing. That is why I asked Rajesh to take thing or Majumdar to take it and give me.
Noted, sir. I'll do that. Keep in mind next time.
Okay, okay. Thank you. Bye.
Thank you, sir. Have a good day. Please stay safe.
Thank you. Bye.